In the last month or so, companies involved in the development of artificial intelligence have taken a bit of a hit on Wall Street. There seems to be some concern amongst investors about the future and the impact of AI as a main component of our culture. It hasn't stopped the development of the technology, but it is kind of an interesting inflection point as we move forward. To explain what's going on and how it may impact in the future, pleasure to be joined once again by Wharton marketing professor Stefano Puntoni, who's also co-director of the Wharton Human AI Research Program. Stefano, great to catch up with you again. How are you, sir?
Hi, Dan. Great to be here. Thank you.
Thank you. I'm obviously somebody who follows the business side of a lot of these technologies fairly closely. It has been very interesting to me to watch from a shareholder perspective and see how there has been this impact on stocks in the last couple of months because of these concerns.
Yeah, so in the month of February, we've seen especially software stocks being hit quite hard. The Standard & Poor software index is down over 20% since the beginning of February. And people have been talking about the SaaS apocalypse. So this idea that many software companies are going to find it hard to sustain the margins and business they've had over the last few decades moving forward because of AI.
So this is being referred to as a SaaS apocalypse, meaning what exactly?
Yeah, this idea that software as a service or SaaS is a kind of business that has been very attractive, very high margin, recurring revenues, and many companies have grown very large off the back of software delivered that way. And there are questions now about the sustainability of that industry in the face of increasingly capable AI agents and AI systems.
So when you dig deeper, what are some of the actual concerns that people have right now?
So in last week we were in San Francisco and we did a roundtable with an amazing group of senior business leaders to discuss the impact of AI on value creation. And this is one of the topics that came up. So I can share maybe a few of the observations that our business leaders made about the impact of AI on software companies. There were at least three strands of that conversation as to where is the threat coming from. And one threat comes from the fact that this industry presents market opportunities. Like I said before, margins have been historically very high for decades. Many customers are kind of locked in into the services provided by these SaaS platforms, whether those are ERPs or CRM or lots of different types of business solutions that enterprises need to run their operations, and they're quite costly, and many customers might not be delighted. So there's basically an opportunity there to disrupt that market. That's one. The second one is the fact that building an enterprise platform is much easier today. I mean, to create those enterprise grade software solutions used to be extremely difficult and expensive. It is much easier today with coding agents, which basically is lowering barriers to entry. And so competition should be expected to be more aggressive. And then third, companies everywhere are rethinking their workflows, rethinking the way that they get stuff done across functions and across verticals. So the idea of a standardized workflow, which is really central to this notion of the SaaS companies, because basically they sell the same product to lots of different companies, might be under pressure. In particular, what our roundtable participants were highlighting was that moving forward, it may be more valuable to have very deep expertise in a vertical rather than having very deep expertise in how to deploy a standardized workflow across verticals. Just to explain a little better, if I am providing an enterprise customer with a software solution specialized on healthcare, and
Right.
now healthcare companies are rethinking lots of workflows, then maybe that expertise is more valuable than having a software that does one specific workflow in a very efficient or standardized or reliable way. And so there might be opportunities there almost for flipping the matrix and having competitors for enterprise software products or solutions being competing more around expertise revolving particular issues in an industry rather than a specific workflow like CRM or whatever. And so that was what our roundtable participants were saying. And when you think about it, now we have these three forces. You have maybe not totally satisfied customers, so opportunities to switch. You've got lower barrier to entry, and then you've got a shifting in the value propositions sought after by in this industry, and all that together could lead to undermining the position of many of these SaaS companies. Now, our roundtable participants did not think that this company would cease to exist. They thought that you would still need foundation layers, so to speak, and that they would not want to have all the data dependent on one particular AI solution vendor, whether that is Anthropic, OpenAI, or Google, or whatever. And so maybe they would want to retain, but the margins could be expected to decrease quite considerably.
Yeah, and part of this, from what I understand, is also a discussion about pricing as well, correct?
Yeah, so there was a discussion about that too. At the center of that has been in the media and across companies this idea that maybe there's pressure to shift away from an input-based pricing model, for example, the number of users, to a more output-based pricing model, which is more like the benefit that the software is supposed to provide to the
Right.
company. And some AI companies are trying to push this output-based pricing, which might undermine the profitability of some of the SaaS companies because that input-based pricing is quite profitable. And our participants at the roundtable were a little skeptical that this would be happening very fast and across lots of different software solutions. The reason being that to be able to price on outputs, you need to be able to measure outputs reliably and in detail. And for many of those complex organizational workflows and organizational outcomes, is quite difficult to do. And so, in the case of some of them, like I don't know, maybe call centers or whatever, where you have clear output metrics objectively measured, reliably measured, trackable over time, then maybe that is going to happen, or there will be pressure towards that. Maybe it won't happen, but it will still decrease the margins, even if you stick to an input-based metric. But for some other, imagine some legal services or whatever, it might be difficult to actually move there because it might be difficult, for example, to track the quality of the output. So we'll have to see. I think that's a little bit of an open question, I'd say.
I would think that presents an interesting, scenario when you're talking about the software developers versus the companies that want to use the software, because the companies that use it, they obviously want a dynamic of the number of users. That's kind of what we've seen built around technology on the internet anyway. So does this present, kind of this unique dynamic as we look at the development of this technology moving forward, as to how both sides of the technology are really looking to move this forward?
Yeah, there's going to be very interesting competitive dynamics. And I'm not a professor of strategy, I'm a professor of marketing, so it's a little bit beyond my expertise. But you can imagine, if you go back to your standard frameworks in competitive analysis, like, Michael Porter's Five Forces or something like that, the arrival of these very powerful AI agents and the competition, the convergence of competition from AI and other tech sector into software, you're going to basically see changes in dynamic competition. It's not only the SaaS companies are feeling the pressure. In many situations, also their clients are feeling the pressure. So you're going to have competitive pressures across the value chain, not just in one particular area.
So then, with this discussion going on, is this kind of an important shift moment when we think about the importance of artificial intelligence moving forward? Or is this, I guess, just a little bit of a bump in the road?
It is. I mean, it's impossible for me to say whether the depressed value of software stocks is going to be more of a permanent feature or something that will change. But I have to say that I think that the month of February might in the future might be looked at as a bit of an inflection point. Up to few weeks ago, I would say that AI was a very important topic, but mostly sold on its potential, what Nate Silver calls the white paper phase. It's like, this is going to happen and you ought to pay attention. And I
Right.
think what we've seen over the last few weeks is going to be maybe a change where now we're talking about impact and not potential. So there have been some discussions about, Eric Bjornsson from Stanford arguing that we're starting to see the impact on productivity statistics. Controversial, but maybe we are. We've seen coding agents and other types of agentic workflows becoming much more powerful and more widely adopted. We've even seen the massive role that AI is playing on geopolitics. Just look at the latest drama around Anthropic and the Department of
Yeah.
War. And so there's been few signs that we might be moving in from the stage where, oh, this is a powerful technology, people ought to pay attention to, because in the future it will have an impact, to this is a powerful technology and it is having an impact now.
Stefano, great to have you back with us again. Thanks very much for your time today.
Thanks, Dan. Great to be here.
Thank you. Stefano Puntoni, marketing professor here at the Wharton School.